Yeah, you can start record now. Recording. Let me know after it's good to go.
You're all set.
Okay. Hey guys, how are you doing? So I'm going to review basics on option contracts and how to read the alert from our group, and then Kian is going to jump and do his other parts on. I think he's going to review basics on financial markets. Okay, so let's do first. Let's go on our Discord. So that's our Discord look, and let's just go through over the different. This is how it looks to me. So we have the announcement. That's for the executive. We announce everything that we think is important. To start, for new members, there's some basic information here that it's going to help you understand the group better. Rules, disclaimer, you guys should read all this. We have our suggestions, we have our testimonials, social media, Merck. These are the important things. So these are trading alerts. That's where I'm gonna go in a little bit. We have our premium chat. This is where all the main conversations happen. We're talking here pretty much all day. Then we have the SPY. We discuss about the SPX index and SPY. We try to find place here, so we don't have to mix it with our premium chat. That way we can keep this just for the SPX and SPY. Key levels, what we're looking at. These are not alerts, but it's what we're looking at. Possible entries. Watch list for executive. Members watch list. We got member alerts, profits, coffee break. Coffee break is like subs when anything that is not related to trading or investing should go there. We got a long-term account for you guys, so you guys can put what options, long option contracts, or what shares you're buying. You share, introduce yourself section. Got a long-term investment. That's me, Sid, and Kian, and Boris. We put whatever shares we're buying here. These are the option sweeps. It gives you flow for options. So for example, here you see when did it happen, what's the expiration day. ThinkOrSwim, expiration 12/4/20, 550 call. That means it's call. It's having all these orders here. So just extra things, and you guys know, performance reports, tips of the day, or voice channels. And here you have education and learning. So we got earnings report that we post every week. We got news for the new guys. We got the basics here. Candy, the TOS scanner, ThinkOrSwim scanner. So you guys can download the script and add it to your studies. Sign up for those who are switching to TD Ameritrade. This will give you instructions on how to get a cash account with unlimited day trades. We got our books section, all the books that we read. And then free member chat. That's pretty much how the channel works. Now let's go through the alerts. So if I go to my alerts, me and Kian do the same concept. We don't hold for the same amount, but we do the same concept. So let's say that you get this message here. AMD 89C at 1.75, 12/04 expiration. Okay, so what does that mean? AMD is the name of the ticker. That's gonna be the name of the company. So we know AMD 89C. So the number here next to the ticker is gonna be an 89. That means the strike price, what I'm looking at. I'm gonna buy at 89 C. C is for the call. If it's a put, like here, you put a P. And 175 is the premium that I paid. Doesn't mean you're gonna be able to get it at the same premium, especially 4 minutes after the market opens. So that's gonna be something you have to try to get a closer one, but be aware that it might not be the same. Sometimes it'd be cheaper, like pen, you could get a cheaper premium today. And 12/04 expiration just means December 12th expiration. So how do I look at this? In this case, we're gonna go to ThinkOrSwim, where it says trade. You gotta put here AMD, and we say 89 call December 12th. So we go December 12th. We see, so we have puts to the right and calls to the left, and it says here calls and puts. And pretty much every broker is gonna have the same concept. So you see 89 calls here. Wow, this went over a lot. So in this case, you're gonna have to put a buy order. You buy how many contracts you want. You make sure you're on the right AMD, December 4th, 89 call. And for the order type, you use a limit order. And in this case, you try to put 175. Obviously, you're not gonna have the same spread because it already moved, it already changed. And you just confirm that and send. So let's say it doesn't send. What you need to do is keep playing with the premium. Okay, well, let's try a 1.80. You also have to look at the spread. You're basically going to try to put a number between the bid, which is the price buyers are willing to pay, and the ask, which is the price sellers are trying to sell. So for example, here, you see a 200 bid and a 204 ask. You can do a 202. 202 limit buying order. So buy, limit, price. And you have to play with it until you get the feeling on how can you get them feel. Sometimes you can do, when it's such a small spread, you just do a 204 order and you're gonna most likely get it filled right away. So the other thing, let's say you put a 202 order and it's not getting filled. What I do, it's like I could switch in the premium, but you gotta be careful because you gotta make sure that after you get filled, that the other orders are all canceled. Otherwise, if you leave them open as an open order, they're gonna fill eventually, and you don't want to buy something that you don't want to buy. You don't want an order filled on something that you don't want to buy anymore. So just make sure you fill it, and if you're trying multiple times just to get the right premium, yeah, you go very quick and you cancel your order. So here it's gonna have you some. It's gonna have a letter here, so you just have to right click it. I think if I do it here. Yeah. Oh well. So you guys see how quick it went there? There was a buy. I'm gonna do it again, and you guys look real quick. It's gonna come this part of the screen. So you guys see that buy there go real quick. So that means you have an order pending on ThinkOrSwim. You're just gonna do right click, and it's gonna allow you to cancel the order. So that way you have the order filled, the one that you wanted, and the other ones that you were trying before you're not gonna have them filled afterwards. And so that's basically a limit order, and that's how you play the alerts. Now to sell, it's pretty much the same concept, and all the brokers are different, but the concept is the same. So you're gonna, instead of buy, you do sell. You sell as many contracts as you want, depending on how many you have to. Like I always buy 7, but at my first order, I sell about 4. And then I leave the other 3 to see if they can go higher. So you sell 4 and you put also your limit price. You keep kind of doing the same. And then if you want to put a stop, you put all the numbers. Let's say you already sell 4 and you got 3 left. So you got to put 3 contracts for a stop. You put a stop here, and let's say you want to start up even. You put the same price that you bought. Let's say you're like, okay, I'm willing to lose $4 a contract here and see how they go. Put a 200 loss, and then you confirm and send. It's gonna give you a description here. So if you wanna do a trail stop, you can also put or trail stop limit. You can do like the current price that it is. Let's say it's at 212, and you can do, okay, I don't want to lose more than $10 on the current price. You can do it by percent. So you see it's at 212. All right, from here. Can you guys hear me?
Yeah.
Okay, perfect. It said disconnected, but I didn't think so. Okay, so yeah, it's gonna be your trail stop limit. So that's pretty much the tool that I use. I use a stop and the trail stop limit. And so that's how to buy and sell. Again, if you wanted to, because somebody was saying that he had a limit order today and it sold. If you have a limit order, you're gonna ask to sell as soon as possible. As soon as it sees that price, it's gonna sell. So let's say, for example, that you confuse yourself and you set instead of a stop, you set a limit order at 200. It's gonna sell right away, and that's gonna mean that you're gonna lose money because you gotta be careful just what type of order you're placing. So for me, I always buy limit. I wanna put a price between the bid and the ask. And then I set my stop. Sometimes I set it, sometimes I don't, but that depends on how comfortable I feel. If everything is moving way too quick, I do want to have a stop. If I'm playing SPY in the middle of the day, you have liquid contracts and they don't go crazy, they don't move that much, then I can have a different, maybe like a more width stock, like a stop. Okay, so for you guys, what you need to know now is when you look at an option contract, what's the best way to make those contracts as profitable as you can? Well, first thing, you want to look at the spread between the bid and the ask. You want to make sure it's not a big spread because that means the price can go from too low to too high or too high to too low. Like big spreads are not good. Let me explain it to you. Like if you have a 150 and a 200 spread and you buy at 175 and you're in a call and the stock price goes down, you are going to lose a lot more money because it's going to go more towards that 150. So the smaller the price, the smaller the spread, is the smaller the risk. And then you have the volume. It's going to tell you what's the volume on this, not on the stock, on the option. And the theta. So you guys need to know the theta, especially for those who like to swing, because that's the amount of money your contract is gonna lose overnight. So if you fill it at 202, and let's say it stays at that price, just as an example, that means tomorrow, if the stock price is the same, it's gonna wake up at 180. So you're gonna lose $22 just for holding it. That's why holding weekly contracts is risky, because usually weekly contracts have a higher theta. Then the delta is the amount of money your contract is gonna go for each dollar that the stock goes up. So let's say you buy at 202 and AMD is at 92.66. So if AM2 hits 93.66, your contract is gonna worth 252. And then after that, your new delta is gonna be 0.50 plus 0.08. So the gamma adds to the delta when the delta is reached. Then you have open interest. Everything above 2000 is good for swims. That means how many people is interested in the contract. Then you have implied volatility. So implied volatility means whether the stock has its big movement. So you want to be careful with that, because what happens? It's moving a lot and it has a high IB. But if for any reason it decides to consolidate and the IB start dropping, your contract is going to lose money just because of that. And it can go the opposite way. It can be like you're looking at a contract and it's in a consolidation, you find a spot to get in and you got in, and after that there's big movement, then you're gonna be making money on your contract because it's going the way you want to, and then the IB is going to start picking up. So just a reference, lower IB is between 20 and 40%, mediums is 40 to 80%, everything after 80% is high. So if you're planning on holding a contract for 2 weeks, what I can suggest to you, unless you really have a plan that you trust and you really trust the trade, you can wait for the first hour when everything moves and wait for consolidation and get the contracts with lower IB at that time, like in the middle of the day when the market's low, because you're gonna hold that. So if you're planning on holding it, you wanna get the lowest IB possible. If you wanna maximize your profit, of course. Then if you're scalping, it won't affect you too much if you're holding it for 5 minutes. The only way is that it doesn't go our way and we have to hold it for longer than 30 minutes to an hour, then it can affect you. But if you're only gonna hold it for 5-10 minutes, it's not that bad. And okay, so now we're gonna do in the money, out the money, at the money. So we have a stock that is at 92. Everything in the money will be strikes that are below 92, or actually 91. So this be in the money. So if the stock price is 92.66, a 91 contract is an in the money contract. They're usually more expensive, but they have a higher delta. That means you're gonna be making more money. And the thing is that when you don't have time, you wanna buy as close as in the money as you can. Then you have at the money, which will be 92. You see how the delta keeps decreasing here? You got a 96, 97. And then like an at the money contract goes to 58. Then you have the out the money contracts, which are all the ones that are above 93. So 94, 95. So these ones are cheaper, but look at the delta. So you say, oh, well, I only have 40 bucks on buying power. I'm gonna get a call here. Well, you're gonna have a call, so you have to make sure if it's worth it, because not all the time your option is gonna move $1. So when the other guy is making 50 bucks, I'm only making 13. That means for a 70 cents movement, which is pretty big, you're only gonna make $8, and most of the people say, well, $8, I don't really wanna take this for $8, I'd rather make more. Well, it takes a lot of work to make money out of the money contract. That's when you need to look far. Like AMD, look at a January contract. And then yeah, maybe do like 105, something that makes more sense. But again, so this is what I was talking about, the spread. If you see a bid of 239 and an ask of 320, you don't want that contract. They shouldn't be more than 10%. Like I would never buy that contract here. 239, 320, 435 and 440, that's good. 500 and 520, that's good too. 695 and 615, that's also good. But yeah, like this one, sometimes in the morning or when the stock is moving fast, it's hard for the option chain to update as the price of the stock is moving. So that's why the spreads are so big. The more the consolidation you have, the smaller the spread you have. And yeah, well, that's basically how you read the alerts and do a basic option purchase. And if you guys have any questions, you can ask right now. Otherwise, Kian is gonna be continuing this.
Good stuff. Any questions, guys? You can just get going. We have a little
Okay, so
Q&A.
let's just make a quick recap. So you get a message here. You see AMD 89 call at 175, 1204 expiration. You go to your broker, can be Webull, Robinhood. It's gonna be basically the same concept. You go, you look at the date, you look at the strike, 89 in this case, and then you look at the price. You put a buying order, you buy as many contracts as you feel, never be 10% of your portfolio if you have a big account. You put the limit price, you gotta look at the spread and see what's in between. Ideally, you can get the same one that I am buying, but it doesn't happen like that all the time. I know guys or people that they're not willing to pay $5 more. That's their decision, but sometimes they get it cheaper too. Like Penn today, I was in a loss for a few minutes, so you could get a cheaper premium too. So not all the time it's gonna be a more expensive premium. Sometimes you can get a better feel, and it happens many times before. And regarding to loss, the first thing you need to do is once you buy that, you put a sell order on stop. You should put all your contracts or half of your positions, depending on how many can you afford to lose, and you set a stop on. For example, I do here 175, maybe 170, and that's a lower I would afford it to go. So that way you're safe. Sometimes they move fast, and if something happens, you're like, okay, at least I gotta stop. It's gonna stop me regardless. And then you confirm and send that. All right, Kian can go now.
Sounds good. Thanks, Falcon. Let me make sure everything is working. Let me pull up the slides. I gotta share my screen. All right, let me know when or if you guys can see my screen.
We can see it.
You can see it?
We can see you.
Perfect. All right. All right, for the stock market wizards, this is going to be kind of a repeat of information, but it's obviously always good to refresh your mind. So, what is the stock market? So the stock market is the business of buying and selling stocks. All stocks are listed on the NYSE, NASDAQ, and AMEX. The NYSE is the New York Stock Exchange. AMEX is the American Stock Exchange. So it's one of the most important sources for companies to raise money. Example, IPOs. These smaller companies want to, or big companies, want to become public. They go through the stock market to raise funds. So what are stocks? A stock is a part ownership of a company. When you own stock in a company, you actually own a percentage of the company itself including its assets and a percentage of its profits. What's a stockholder? A stockholder is the investor who owns the corporation because they own shares of the stock. So what's a common stock? A common stock is the kind most investors buy. Common stock generally gives one vote at shareholders' meetings for every share owned. And a preferred stock generally does not have voting rights, and you generally will not find them trading on the exchange. Just some moments in the stock market, some things that obviously have affected the market as a whole. The Wall Street crash of 1929, which is called Black Thursday, the Great Crash, which ended up being the beginning of the Great Depression. Shares prices of the NYSE collapsed and continued to fall for about a month. And the stock market crash in 1987, the Black Monday. Dow Jones fell dramatically, 22.6% in one day. So, when we have these little dips in the market, and some of us get a little afraid, think about 1987, see how they felt. So what's the NASDAQ? The NASDAQ is the National Association of Securities Dealers Automated Quotations. The American Electronic Stock Exchange began in 1971. It is the largest electronic screen-based equity securities market in the U.S. There are, give or take, a little more than 3,200 companies. In the 1990s, it became the most popular method of trading stocks. And the reason is because they have some advantages, like less expensive to operate, not limited in space. Investors can trade more kinds of stocks and can operate for longer hours. So, for example, the S&P 500, you need a lot of requirements. The NASDAQ, it's much easier to get into this index. So the NYSE. So that's the New York Stock Exchange, the stock market index covering all common stock listed on the New York Stock Exchange. So over 2,000 stocks, 1,600 are U.S. corporations, and over 350 are foreign corporations. The Dow Jones Stock Market Index, founded by Charles Dow, includes the performance of the industrial component of America's stock markets, includes 30 of the largest and more widely held public U.S. companies, such as AT&T, McDonald's, Microsoft, Boeing, Verizon, you name it, Coke, Walmart, all the ones that you've heard before. S&P 500, Standard & Poor's, index which includes the stocks of 500 large cap corporations. Correction, there's actually, I think right now, 496, if I'm not mistaken. So there's not 500 companies yet. And they're chosen by a committee. Not necessarily the 500 biggest U.S. companies. They're based on liquidity, size, and industry. There is also an S&P 400, 600, and 1500. So, how do you make money in the stock market? You want to earn a return on your investment through either dividend payments or increases in the price of shares of the stock. The amount of return depends on how much profit the corporation makes, the price of the stock, and how much stock you own. By selling the stock, it's either capital gain or capital loss. So the capital gain is the profit you earn from selling stock at a higher price than you paid for it. The capital loss is the loss you take when you sell your stock at a lower price when you paid for it. Obviously, you hear that term a lot, buy low, sell high. That's how you get the capital gain, right? So stock prices. So the price of a stock depends on what other people are willing to pay for it, so to buy it. Supply and demand. Successful companies, have larger profits, high dividends, which equate to higher price of shares of stock. There's obviously exceptions. Like, for example, mRNA, right? So mRNA doesn't give out dividends. The profits are not that big right now, but as you can see, their shares are over $150, right? So this kind of varies, but with biotech companies, it's kind of different. But for the general market, this is kind of the rule for them. Unsuccessful companies, low dividends, lower price of shares of stock. For an example for this one is, you can actually Google, top 10 companies that give the highest, or top dividend paying companies. They have a crazy dividend. Doesn't mean that they're a successful company. They're actually most likely with ones who have high dividend yields. They are basically borrowing money from the bank to pay you out. So if anything happens to that company and you're holding a lot of shares of that company, something bad happens, I mean, you're most likely going to lose your investment. So, successful companies, unsuccessful companies, it really depends, on the circumstance in the company that you're investing in. There's two general classes of stock. There's blue chip stocks and there's growth stocks. So blue chips are shares in large, well-established corporations, steadily sales and profits. Dividends usually grow over time. Stock values do not change rapidly, involves lower risk. Coke is a good example. Procter and Gamble is also a good example. You don't see crazy swings in their prices. It's very stable, safe investment. These are stocks that you like to, like AT&T, you can just pile on shares for dividends. You're not expecting a return, a big return, or unless they make some crazy 5G innovation that partners up with SpaceX or, whatever the case may be. But, those are the blue chip stocks. Growth stocks are stocks in corporation that is expected to experience rapid growth. Pay no or very small dividends. Return is in the form of large capital gains. Growth company has a higher chance of failure. And obviously, we like, young people like growth stocks. It's a little higher risk, but there's a lot higher return if you pick the right one. Obviously, Tesla, Zoom, those type of stocks. Some important stock vocabulary, and we're going to get more into this when we get to the financial classes later on. But these are just some to keep in your head. Earnings per share is the amount of profit each share of the company is entitled to. So earnings per share is their total earnings divided by outstanding shares. And you can get all this information on Yahoo Finance. It's right there. It's provided for you. It's very easy to find out. And it's an assigned rating of 1 to 99. An EPS rating of 99 indicates that a company's profit growth has exceeded 99% of all publicly traded companies. When they're going public, when a company sells stock in itself for the time, a share is investors' ownership of the profits, losses, and assets. And ticker symbol is just a short group of letters representing the stock name. Tesla. Tesla's the company, TESLA. The ticker is TSLA. So what's the difference between a bull and bear market? A bull market is where investors feel very confident. They're optimistic and positive expectations that good results will continue. A growing GDP, increased jobs, and of course the rise of stocks. Obviously, today's market is a little weird, a little different. You obviously see a decline in jobs, a loss of jobs. Obviously it's been affected by the virus, and that kind of was a big factor. But in a general bull market, increased jobs, growing GDP, stocks are rising, and investors feel confident about the economy, and the company's earnings, their positive earnings coming out. So that really leads into a bull market. So the opposite of a bull market is obviously the bear market. Bad economy, fewer jobs, recession, falling share prices. And when all this happens, investors start to feel, pessimistic. They get a little scared, a little worried, feeling that stocks are going to take a cliff dive. Experience a decline of 20% or more over a sustained period of time, typically 2 months or more. In March and April, I think maybe beginning of May, I think might have. We were in the bear market. I mean, you wake up every morning. We're hitting a circuit breaker every single morning. We're down 7%. We're down 15%. And then we have one day that the Dow is up 1,000, but overall, we're down, 15% in the market. And so that's what a bear market is. Obviously right now, with the crazy time that we're in with the coronavirus and whatever else is going on, we're not even looking at the bear market. We see a little corrections here and there, a healthy sell-off, but we're nowhere near a bear market. Some common, terminology in trading that you hear in the chat a lot, especially for the beginners that kind of don't get the lingo. Scalping. Obviously Elkin, Chase. Maybe sometimes I'll do some scalping. It's just quick day trades. You see Elkin, Chase. AMD calls. 3 minutes later, 4 minutes later, selling at this price. They're in and out, really quick trades. And for me, which I love, as you guys can tell, is swinging. So holding a stock for more than one day, or an option for more than one day. TP, quick way of saying taking profits. BP, buying power. Do I have the BP to purchase a stock? Hold, obviously holding the stock for longer. Long means holding the stock for a long period of time, or option for the long run. Short, bearish on the stock, think it will go down. You can use these terms as well for calls and puts. If you say I'm going to go long, or I'm going to go short, you're technically saying I'm going to get a call or I'm getting a put. They kind of work in the same way. A gap is an empty space where there is no contract or shares traded. A call, obviously, an option trade that bets on the stocks to go up. A put is an option that bets on the stock to go down. ER, earnings report, or earnings, and we tell everyone earnings is 50-50. You can just flip a coin, pick if it's a call or put, and if the coin is heads, and heads means call, go for the call. So earnings is obviously always risky. HOD, high of the day, the stock is the high of the day. LOD, complete opposite, the low of the day, lowest price of the day. FOMO, hear this a lot. Tesla, Zoom, obviously those big ones. Fear of missing out. Zero DTE is 0 days till expiration. Like SPX is a good example. I know Team always says zero DTE expires that same day, and that only applies to SPX. And I think, if I'm not mistaken, I think that's it. I don't think you can trade any other index same day expiration. BTO is buy to order. STO, sell to order. So this is my routine before I start the day. I wake up around 5:45, stretch. By the time 6 a.m. I'm stretched, awake, shower, whatever you need to do. Get my coffee, eat a quick protein bar, and the first thing I do, I check futures. I see how the market is, pre-market, how that's going to shape up the day. I always have CNBC on. It's not, there's no left side, right side. It's just specifically for the market, what they're talking about with, upgrades, downgrades, whatever. So CNBC is a good source. I always check for economic reports. For example, I know tomorrow, Chairman Powell is speaking at 10 a.m. So, maybe we shouldn't do any trades at 10 a.m. Whatever he says could affect the market either positively or negatively. So I checked economic reports, any analyst ratings that are either posted on Twitter, Yahoo Finance, investing.com, downgrades, upgrades, and obviously that affects if you're in calls or puts. If like today, Apple, got an upgrade to 130, and obviously you see Apple making a pretty big move, right? And then right after that, I check my open positions. I check, I look at the market and I say, okay, well, I have these positions. They're longer swings. Do I need to adjust anything when the market opens? Do I need to cut? Do I need to maybe add? Maybe add to my position, or hold and sit tight, and then obviously start making new plays. And then identifying any upcoming news. Obviously, hearing vaccine news, economic news. And now we have a new president. Seeing who he picks for his advisory board, etc. Whatever the news that has to do with the market, make sure you know it. And then key levels. Either key levels pre-market. I know Elkin is always up super early in the morning, has those key levels ready. If you guys have your own key levels, that you charted the night before or the morning of, look over those. Make sure if pre-market moves, have they broken your support? Have you broken your resistance? Check those out. Maybe you have to adjust them by 2 points, 3 points, whatever. And after that, you should be ready to go. Trade away.
No.
Oh, maybe you guys can mute yourself. You guys are not muted yet. Thank you. This is one of the most, I think, most important topics is risk management and trade size. The most important thing is to risk what you can afford. And this is why, I want to talk about this. So why consistent trading size is key. You don't want to risk more on a next trade and suddenly lose a dollar value larger than you're used to. And you start freaking out or chasing the next trade to make up for the loss. Losing is a part of the game. It should not affect you on your next trade. If we are trading at a success rate of 85%, more chances than not, your probability of winning the next trade is pretty high. We send our performance reports. I think we have an 87, 88% hit rate now. Not that we're bragging, but your chances of winning plays is very high. So if you lose a trade, if I make one bad trade, there's no reason to revenge trade. If I say a call, we lose the call, then doesn't mean you're going to enter a put on that same trade and hopefully regain that money. Just relax, take a breather, move on to the next trade. To maintain discipline, take out profits after each week so you don't stray away from your trading size, discipline, risk management, so you don't get fat-headed, overconfident with profits, and go on risking more and more on your next trades. This sets up for disaster eventually when you do lose. Me personally, any profits I make on options, I move it and I buy equity. Okay, so I don't play with my profits. What I'll do is either I have two options. I will take out my initial investment. Okay, I will use that for the equity and then play with the profits, or vice versa. But I don't, if I spend $2 on an option, so $200, I make 400. I'm not going to use 400 from that trade to, play another risky play like a Tesla call, because then all that work I did to make that play is going to be gone. So that's another thing that, I don't do. I take my profits from my options and I buy stock, and I'll just let the money, build for me. Take a breather when you overreact or take a loss. You feel emotions are rising from. Trading and thinking with a cool mind and heart is the only way to be trading. If not, take a step back and relax until you're back up and running properly. Emotions and mentally unstable moments lead to mistakes. Don't let losing affect your mentality when trading. Keep it consistent, steady, stable, level-minded. If you make $2,000 on one play, that's great. Don't get cocky and, think that the next day you're going to make $4,000. Then you're going to blow that $2,000 profit that you did the previous day. There's such things as trader overconfidence, in which, you've been winning so often, you go big in the next trade and you finally lose. And this time you lose a big one. Don't let that be you. This as well as lack of confidence. Don't let a loss take you over from making the next trade. Follow a strict strategy. In the long run, I promise you it will work. And I think that's one of the benefits of, now with paper trading. For losing trades, you can always go back to paper trading and see what mistake you made. Did I not make a stop loss? Did I enter, a false breakout, etc.? Just move on to the next trade. It's not a big deal. There's like 250 trades in a year, or 250 days of the market in the year. You have plenty of time. What separates good trades from bad trades is obviously risk management. You've probably heard the statistic that 90% of day trades will fail to make money. These failures are the result of trading with a lack of education and inability to manage risk. These are avoidable failures, in my opinion. It's very important for us to dig into the causes of failure so we can learn to avoid these common mistakes. These learning experiences are key. You want to learn it once, maybe max twice, because they get pretty expensive. These are very expensive learning lessons. So it's better to learn it early than later, because you're going to lose a lot of money if you're not really understanding risk management. And the success in trading. Success is not about being 100% right of the time. In reality, it's about learning to cut your losses when you're wrong. Imagine if all your losses were only $10, but your winners were $90. You wouldn't need to be right that often to cover your losses. In fact, you're right just 10% of the time. You break even before commissions. And as we say, especially on slow days, sometimes the best trade is no trade. My rules when I trade. So I never revenge trade. I do not want to double down or add to a losing position or show the market that it is wrong. No need to justify your logic or research. Accept the fact that the market and price action is always right. Never take a trade just because you're bored. Go play with your dog. Go to the gym, home gym, whatever. Watch a movie. Do something. Do something except just enter a blind trade. And I will not lose more than 2% of my portfolio on any trade unless I'm literally going for a YOLO and I'm expecting to lose all of it. But I rarely do that. Never buy or sell with a market order unless it is a butterfly and the bid ask is too much and there is risk of assignment. Please do not fill a contract on market order. You are always going to pay the highest price, and you're going to notice every time you enter that trade, you're going to start negative, regardless. I mean, you might get lucky and be up $1, but just please do not use market order. Use limit. Try to get the lowest bid. If not, you work your way up. Reconcile on a weekly basis and analyze your winners and losers. Try to replicate the winners and reduce the losers, and try not to repeat the same mistakes. Keep it simple. Do not complicate. And it is okay to take profits. So, and another thing is, I think Puri mentioned it earlier today. I would rather buy one share of Amazon at $3,000 than buy 1,000 shares of some junk company at $3. So, for example, there's this random biotech, firm called, I think it's like Heat Bio or something. It's like $1.50, right? And I see on these, Robinhood forums on Facebook, and they're saying, I'm going to put 10K in this random, biotech firm. Okay. There's no reason to. You'd rather pay 10K on a good company knowing that you will have a return on investment. I will never buy $1,000 worth or $3,000 worth of a company that I have no idea, about, or that's less than $10. Unless we got lucky with Palantir or one of those kind of stocks. But it's always better to buy one share, for example, of Amazon at $3,000 than buy 1,000 shares of some junk company at $3. All right, and then I'm going to show you guys a quick tutorial on TOS and how to use it. Let me go to Discord screen. Okay, let me know when you guys can see my ThinkOrSwim.
Yeah.
We can see it.
Okay, great. And let me know if I'm talking too much. You guys need a breather or anything. If it's too much information, or if you have any questions or whatever, please don't be afraid to ask. All right, so here's ThinkOrSwim. For people who haven't used this application, and this is on the desktop. This is not on my phone, obviously. But this is what it looks like. And before we get into the how it works, for the people who are worried about the pattern day trading restriction, if you're on Robinhood, or if you're on if you don't have 25,000 in your account, TD Ameritrade cash account, we have a section on Discord showing how to sign up. So basically what a cash account is let's say you have $1,000. Okay, you have $1,000. You can trade as many times as you want. So you can trade Apple as many times as you want until that $1,000 is done. So I have $1,000 to spend in my cash, right? Whatever I make or lose that day, it will be cleared the next day. But you can trade as many times as you want that day. Okay, so that's the great thing about the cash account, because then you can do scalps. You can day trade, obviously. But you have a limitation. You have a limited amount of cash, right? So, but you don't want to be the person saying, "Hey, I'm up 60% on my contract, but I can't sell it because I don't have any more day trades. And you don't want to get stuck in that problem, right? You want to have as many day trades as possible, to successfully get out of your contract or scalp or whatever you want to do. So we do have a section on Discord, to sign up, and we don't get any commission or anything. I'm pretty sure I should call TD Ameritrade, to get sponsored by them, because we've moved a lot of people to TD Ameritrade, but we don't get any commission. Just sign up; it will save you a lot of money. So yeah, here are the tabs. You have monitor, trade, analyze, scan, market watch, charts, tools, education, help. Monitor is basically showing your orders, all just your orders and positions, accounts. Trade, this is where your options are, option chains. You saw Elkin filling orders. So when you first start with TOS, the strikes right here will be around, I think it's default is like 8. So some people will say, hey, I only have 8 chains, right? So you got to make sure the strikes say all. So you got all the strikes for the expiration. And right here, filter, I don't use at all. Spread, you can do single, which is like a naked call or put. Vertical is if I'm in a vertical call, you're buying a call and you're selling a call. Margin is required for this play. Back ratio I never use. These are just all margin plays, but basically you can filter them. So if I just want verticals, right? I have a position right now in Tesla, a vertical. It's automatically set to verticals. I don't have to. So say if this wasn't a vertical, say it was a single. If this was a single and I wanted to play a vertical, I would have to manually change this to a vertical, and that takes time. Then finding the strike, so that takes time, right? Rather than changing the spread to automatically vertical, find the price that you want, and you can obviously adjust it if you need to adjust it. So that's that. Layout, this is what I like to have. I like to have the delta, the theta, implied volatility, net change, open interest, probability in the money. So this shows the probability of, I have a 50% chance of getting this in the money. So I like to have the probability, the bid, and ask. And one quick tip when you're finding contracts for swings, we're going to get way more into it when we talk about swing plays and how to create swings, is that I never buy contracts with less than 200 open interest. So I will not buy this contract. I will not buy this contract. I will buy ones that are over 200. Okay. Right here is the volatility, the average volatility of that weekly or, that expiration time, right? And then this is the expected move. So Tesla for this week has an expected move or up or under of 57.96 points. So Tesla can go, in that kind of range. And that's why contracts get more expensive. The further you go. I mean, look at this. January 20th, 2023, that's a 774 move either to the upside or downside. But this is what it means. This is how much the stock is going to move over or under. Right here, the underlying, the symbol, last price, net change, the bid, ask. This is just for the stock. If you want to buy stock, all you have to do is right click, buy however many shares you want, and it will fill. Like today, I accidentally bought 1,000 shares of AMD when I just wanted to buy 10. So that was because it just filled automatically. I didn't change my settings. Volume, this is the daily volume. 63 million traded today with Tesla, which is a lot, which is really good to trade. Open, high, low. This is things that you guys all know. I don't use Forex. For the Forex traders, there is a Forex, trading that you guys can do. I don't trade futures either. Trading futures, you really need to know what, how to trade futures, or you can blow your money in a second. I don't trade futures because I don't know how to trade futures. you can easily lose all your money. Active trader is just, you got a couple charts here, and obviously your position. You can buy, sell. Shows your P&L open, P&L day, how many how many shares you have of that company. So that's a pretty cool way of, you're looking at your chart, your positions. If you want to be a day trader of equity, it's very easy to do. Pairs trader, it's kind of like the same thing. Same thing. He's just on the other side. Analyze. This section, the fundamentals. These I don't really use. Risk profile, I honestly don't use. Probability, I take a glance at it. It kind of shows, above 651 by December 4th. They're giving it a 16% chance, right? So, this kind of gives a probability of if the stock is going to hit that price or around that range on that date. So I don't really use it this much, but if I'm kind of bored and I want to see, what are the chances of Tesla hitting 700 by next week? I'll take a look, but I don't rely on it. Economic data, you can look for everything. I mean, banking, population, regional data, academic data. I mean, this is about everything. Everything that you need is here. As far as economic data, think back. I don't even. I think you can just go back to a trade and on a certain date. I don't use it. Fundamentals. This is a good stock tab to use when you're analyzing stocks, and we're gonna cover this as well when we get into those financial classes. This basically shows, a whole. These are ratings from different sources. Don't really rely on them, just because if there's some energy stock that says accumulate, buy, 5-star buy long, it doesn't mean you're gonna go, put your life savings into it. Don't always rely on it, right? Look at the charts are your friend. But this will show the financials, rather than going all the way to Yahoo Finance or, whatever source that you use. This shows everything from financials. We will go over, these terms and what I look at when I want to invest in a stock long term. You can do annually, quarterly, but this is a really great tool to have. And earnings, this is obviously a great tool. It shows the earnings, right? So Tesla's was November, or this is JWN. I have no idea what that is, but so next earnings for Tesla is January 27th. But this is a very quick way of figuring out, when the stock's earnings at. Scan. There are scanners. I just deleted mine just so it's kind of easy for you guys to see these tabs. We do have scanners in the Discord channel that you guys can easily just download and add them in here. I love the TTM squeeze scan. So I basically get an alert in a notification saying Tesla has entered a squeeze or Chewy has entered a squeeze. So you kind of what stocks are moving and what stocks aren't moving. So I will send this scan for everyone. That way it's kind of easy, rather than having 40 charts up and looking at 40 different TTM squeeze indicators. You can just put in a scanner, click scan, and every time a stock will either get out of the squeeze or in the squeeze, for example, it will give you a notification. So this is a great, resource to have. Option Hacker, I think this is just another scanner that you can do based on, volume, strike, whatever. It's basically the same thing. You can just change the filters. Spread, these are all like the same, all scanners here, depending on what you want to do. I have no idea what these things are though. Market Watch, these are all currencies. You have the USD, THB, Great Britain, USD. I don't really use this. I'm sure a lot of people who are interested in Forex probably enjoy this section. I don't use it. And calendar, these are actually the economic data, conferences. And this is what's great about TOS, is that it gives you all this information. What tomorrow, we have the GDP reports. I mean, we have manufacturing. And now it doesn't say, Chairman Powell is speaking, which you can find out, either if I post it on the Discord or, we'll post a link saying Chairman Powell is speaking. But this is the overall calendar of what's going on. And then so we go to the charts. This is just a basic chart. When I click chart settings, let me know if you guys can see this. Can you guys see chart settings?
I can see your charts.
You can see my chart, but you can't see chart settings, right?
No.
Okay, that's fine. I will just put it in like a PDF, and I'll show you the settings to have for your charts to look like this. When you open up TOS, and you can change it. This is just my preference. It's just clean and easy. When you open up TOS, because some candles are filled, not filled, different colors, whatever. But this is the chart, and using TOS chart, here's the time frame. You can change the time frames. Daily, 1 minute, 5 minute, 15 minute. You can add them as your favorites. I just like to have them all listed. The style, again, these are all personal preference. You can change your candlesticks to, I personally like Hike and Ashy, but you can change the bar, candle trend, whatever, lines. But obviously lines are not going to work for analyzing charts. Drawings, there's drawing tools, easy way to draw your resistance support rather than drawing the line. You see this this symbol right here where there's a line and a dollar sign above. You click that. All you need to do, if you have a mouse, you can just click it, double click it, and it will extend the line from left to right or right to left, doesn't matter. And what else you can do, if you right click, you can actually edit properties. You can make the line, thicker, smaller, whatever. You can change the color. And what else you can do is that you can show the price of that line. So rather than you dragging your cursor and looking at the right side of the chart, okay, so that's what 598.64 around there. What you can do is click show price. I like to do it on the right, and it will pull up right there for you. So now, right, like actually, to be honest with you, this is a great resistance right now. So Tesla can't break this resistance. Breaks here, but fails. Tries to break 598, can't break it. So this is why when I say, we're going to get more into this, but just as a quick example, I like Tesla above, let's say 599, but with a solid confirmation. So I have these lines, drawn everywhere, right? So I'll do a quick, on the right, 3, red, whatever. I mean, you can set as a default too. Obviously I've changed the settings on my charts, for example. But it's very simple. So again, you go to drawings, go to drawing tools, you click this price level. It's called price level. So there's a line and there's a dollar sign right above it. Another cool feature, obviously you can do a trend line. So I don't know, you can just do here, just click, whatever. So you can just draw a line whenever you want. Another thing that you can do with the drawing is actually you can do text. You can just do a text note. So let's say I'll write a text note. Tesla above, 599 for calls. Okay. So right here, Tesla above 599 for calls. If you click activate, you can move it around wherever you want. And there you go. So you have your notes on your chart as well. So let's say I have this 598.78 line, okay? And I'm not looking at Tesla. Let's just say I'm looking at Apple, okay? So what I'm going to do before I change charts, I'm going to right click this line, okay? I'm going to do create alert. What I'm going to do is if I want to get into calls, I want Tesla, for the example, at or above 598.78. So I will click create and it will say mark 598.78. When Tesla hits 598.78, it will give me an alert on the top left corner saying Tesla has hit your alert. It will also give you a notification on your phone. Okay, so you will be updated on all the alerts that you post. So again, you go to the line that you drew, you go to create alert, at or above or below. If it breaks below, it will give you an alert. Okay, it'll be posted right here, and then if it hits, you're gonna get that alert straight on your phone. Okay. What else? What else is there? Whoever is interested in Fibonacci retracements, I personally do not use them. I haven't studied them well enough to, implement it to my trading style. I know there's some members. I think I know Elkin does it. Borax. If I'm not missing anyone, Brady does it. There's a good amount of members who do Fibonacci. It's a great tool. I heard it's one of the best tools you can have to find the ranges of the stock. And if some don't even have resistance, Fibonacci is a good tool to use. But that's about it for the drawing. I mean, you can do arrows. You can play with it around. It's not, it's very user friendly. If you wanted to zoom in to the chart, just hold your mouse click and you just drag, hold and drag. Or you can just go down here, zoom out, and this is just in the 1 hour. You can change it to whatever time frame you like. So once you have your drawings and your chart looks very simple and you want to get more complex, you get into the studies. And again, we're going to go through this in another class of what studies we like to use and the studies that we will give you that helps us. So you do studies, add studies, or what I do is just click edit studies. And let's say, very simple RSI. Let's do RSI, apply. So RSI will pop up. Okay, so we have that. Custom. So I have this study for you guys. It's pinned in the channel, but I will post it again. I think it's in the TOS study channel, and I will show you what this one looks like. So this is what we mean when we say there's heavy selling pressure, there's heavy buying pressure, right? So this will tell me, like, let's say this candle bar right here. Okay, this candle bar. So let's say, we're looking at Tesla, and right now, actually, after this candle, there's a lot of buying, right? So you're seeing kind of a reversal here. So with this indicator that we provide, there's a lot more buying than selling, okay? But doesn't mean we're going to enter a call just because of that. This is just another indicator. You have to use different indicators, at least 3, to confirm, let's say, a swing. Scalping is a whole nother story, but for me personally, there's 3 indicators I like to use, and I'll go over that in the next class. But this is just how to add the studies. There's a volume study, RSI, but in general, you click studies, edit studies, and add whatever study you're comfortable with. Let's say you're ready to go with your studies. Let's just do one more. So let's say you have moving average exponential. I like to use 8, 21, and 200. So let's say I want 3 of them, right? So I'll just click it again, double click it again. I'll click settings. I'll change this to, let's see which one. So this one to 8. I said 8, not. And then I will make sure I know the color, and I like to have the lines a little thicker so it's easier to read. So let's say blue, okay? So this one is going to be 21. I'll do, let's say red, let's just say 2. And then this one will be a 200. Let's just do this green. So you apply, so you know exactly which color. So this is the 8, this is the 21, this is a 200. So that's how you edit your studies. You can click the settings button, you can change whatever, whatever setting that you want to change. So that's the studies. Patterns I don't use at all. I don't even know why it's there for me, honestly. So when you click trade, This is a very easy way to trade. You can buy shares right here. Time and sales is showing the time, the price, and the amount, the lot size of how many shares are being bought or sold at this price, or at this price at this time. Active trader, it shows the volume, the buy orders, the bids, the ask, and the sell orders. Also shows your positions, average price, your open, and the day. Buttons, same thing. Buy market, sell market, easy way to buy equity. Phase score I don't use. Same thing. And then level 2. This is just traded between different brokers. So I don't use this too much. So I'm not too comfortable explaining it. It's here if you guys do understand it. I don't use it that much, but that's there for you. Level 2. And news. You have news for the specific stock that you're on. So there's a lot of information to have, as you're trading that stock. And then last but not least, let's do this. So right now I have, my tabs aren't open, right? So once I click this left arrow, there's going to be, obviously I have stuff, but I deleted it for this tutorial. This is basically your watch list section, your account info, and whatever else you want to add. So my account info will be here, and if I want to add a watch list, so I'm going to click watch list, and here is a default watch list I have. There's, I don't know, 30, however many stocks there are. Okay, so this is just the default. What I can do is you can make your own and you can save it. Okay, so you go here and you can either edit it or let's say you go to personal, you have all these. But I think one of the most important ones actually is the markets. So what everyone should have in their watch list is these. Actually, you don't have to worry about this one. So Dow Jones, SPY, SPX, comp is NASDAQ, QQQ. This is SPY futures, NASDAQ futures, VIX. VIX is the fear index basically, and the volatility index. So the lower the VIX is, the better for the for a bullish market. There's not enough volatility. This you don't have to worry about. And I have I think this is transportation. Transportation I kind of just have it just for there, but I don't really use this. But the main ones are all of these: VIX, NASDAQ futures, SPY futures, QQQ, NASDAQ, SPX, SPY, and Dow Jones. Because as you're trading, you want to know how the overall market is doing, right? So if you're heavy in tech, if you're heavy in technology calls, right, across the board, but you see NASDAQ dropping all of a sudden 100 points, 150 points, 80 points, whatever, you're going to expect, your calls to go down, right? Because the overall technology market is dropping. So this is a good, symbols to have on the side. So let's say you have, this watch list. What you can do is add another. So you can add as many. You can create one. You can go by industry, top 10 gain, top 10 loss, lovers, losers, downgrades. I mean, it gives you every single type of watch list. So let's say you have your watch list. I mean, there's so many things you can add. You can do quick chart. Quick chart will give you, let's just say Apple, give you a quick, chart of Apple. And if you want to delete it, all you have to do, click the settings button, click X, and that's that. What I like to use is this is how I watch CNBC, is Trader TV. I change this, CNBC, this will pop up, and I'll be watching CNBC as I'm trading because I want to know exactly whatever's going on. Let's just say Kramer. Kramer's a pump guy, right? Whatever he says, the market will react. I don't know why, but he screwed me a lot of times, but he's good to listen to. So you can have this on the side as well. Yeah, I mean, it's whatever you feel like you want to have, you can put. You have a scratch pad. You can play Tetris. You can live news, messages. Messages from if you have questions of support. But yeah, that's that whole side. Tools, videos. I think they just have just random clips of the day. Think log. These are all your alerts that you created. I had a look at this. I had a note on SQ on July 2nd. Buy more. Just keep buying. These are like stupid notes. But these are your alerts. For some of your alerts that if I didn't delete. So think log is all your alerts that you created. Get videos shared. Shared items is like your scripts. You can share it to people by based on a link. Education, definitely take advantage. They have great classes on technical analysis. I have a whole handbook of charting from them, and I think I posted it in the Discord, but I have to look again. But they have a great education source that you can use. Definitely take advantage of this. Learning Center, this is it. If my ThinkOrSwim tutorial was just absolutely terrible, you can always go back to ThinkOrSwim and they will probably give you top-notch tutorial on how to use this software. You can go on today's option statistics. You can go to technical analysis. How to draw patterns, technical indicators, scripts that you can either create or use. So it has everything. You got a glossary of literally every trading term that you need to know. And last but not least, contact support. If you need any help, let's just say your contract got expired or exercise, you need to contact support right away. Just click support. I do on my phone because it's just much easier, but everything is here. Everything is here. And last but not least, on demand, it's for paper trading. Basically what you can do, let's say you want to use a new indicator, a new study. You can simulate a day, a random day that's happened, like let's just say November 18th, 9:23, and it will simulate that exact day, and it will actually simulate the option chain. So it will show prices of what the options were once it loads. It's kind of being glitchy, but so once it will show the option contracts from that day. So this is a great way of practicing new studies that you created, or just testing your abilities. If you're getting confident in doing your own trades on the weekend or after market, go on paper trade and see what you can do. See how you do. I think they give you a certain amount. Right now it says I have 107,000. So my greatest tip is don't buy 1,000 contracts of a Tesla call, and then getting a December or 11:30 550 strike, because you already know what Tesla's going to be on November 30th, and you know what the strike price is going to be. So you're not learning anything. Go on a random stock. Let's just say Johnson & Johnson. No one trades. Barely anyone trades this stock. You don't know what the Johnson & Johnson stock is going to be. Let's say in, I don't know, September 14th. Trade these kind of stocks, or trade some that are higher volatility, but something that you don't know the future price of, because you can actually learn. And think of this option buying power or cash or whatever. Let's just pretend that you only have 10,000. Okay, so use your risk management skills still. So that way you can feel that you're trading like in a real market, because people can go on paper trade and then just gamble $50,000, and then you say, oh wow, look, I made $250,000 on an option. Well, you didn't learn anything, because then once you go to the real world, you want to make a trade, you're not going to have the confidence to enter 15 contracts, basically 80% of your account, so that's just my tip. Paper trading is a good way to practice strategies, how to use different indicators, and simulate it in a way where you're using basically your real money. That's the best way to learn. And with that being said, I think that is it for me. We can do, have a quick Q&A session. I appreciate you guys listening to Elk and I ramble for an hour and 20 minutes. But yeah, if you guys have any questions, please ask. Or if you guys learned so much and have no questions, feel free to go enjoy your dinner or whatever you have to do.
Hey, good evening, Keon. This is
Hey.
My name is Justin.
Nice to meet you.
Screen name is J Mill. I have a question. The scripts that you gave to download, I really don't know how to use it. I don't know how to download it to my studies.
Okay. Yeah. Let me do that. Okay. So let me go to the ThinkOrScript, or I'm sorry, the TOS scanners section on Discord and click one of them. So I'm going to click the link, and it should say this link will take you to tos.com, whatever this link is. So it will take you to tos.mx/whatever, and there's going to be a tab that says View in ThinkOrSwim. Let me see if I can actually quickly change my screen.
Yes, I'm using the iPad to look at ThinkOrSwim, and then when I click on the link, it says Safari doesn't go over there.
That's the problem, actually. So some indicators don't work the same from iPads and desktop. Like, for example, TTM squeeze, they don't work the same. They don't have the full, let's say the green dots, red dots. These specific indicators that I posted mainly work for desktop. So the best case is first of all, you can always ask us, when you're looking at a trade or whatever, ask us what the volume is like, if it's more buying or selling, like the ones that we gave you, or another indicator or study that I gave you guys is an automatic resistance and support study, where basically it draws out all the resistance support. So you can get those levels very quickly, but those work specifically for desktop because it takes so much power, for the software to run. So that's probably the main reason why they're not showing up.
Got it. Appreciate it.
Yeah. So don't be afraid. You always ask us, because that volume indicator, please ask us. Like you can just be like, hey, how's the volume on Tesla right now? How on the 1 hour or 30 minute? We'll always tell you. We will always tell you. And then once you're on a PC, and obviously a lot of people are at work and they don't have access to the desktop ThinkOrSwim. We're always here. Any other questions? You guys good?
No other questions?
Don't be afraid. Don't be shy. No question is a stupid question.
All right. I have another question. With the call and puts, I still kind of confused on the in the money and out the money.
Okay. So let's look at this. So let's just make it easy in Apple. So let's say we want an in-the-money play on Apple, okay? So right now, Apple is at 119. Well, it closed at 119. So let's say, it's at 119. Let me actually change this. So an in-the-money play will be a 118 call. Barely a 119. I mean, you can consider this as an in-the-money. Okay, but this 118 strike is in the money. The reason why people get in the money plays, you're going to pay a little higher premium, but this right, and we're going to teach you guys this as well, this right here, the delta is higher. So every dollar the stock moves, this is what you will gain or lose. But then you have to factor in the theta and all that stuff. But the main reason is we go in the money plays is because this higher delta. Now out the money is if someone doesn't want to pay, a higher premium, they will get, if Apple's at 119, let's say they get a 125, which we don't recommend because look, the expected move on Apple is about 3.5 points for this week. Okay, so the chances of Apple moving to 125 is very slim. Okay, and that is why the premium is so cheap. That is why delta is so low, and you're not going to make much money. Now, the open interest is very high, but that's because it's a very cheap contract and anyone can buy this contract because it's very cheap. But this is what out the money play is. It's like 6 points, 6 strikes away from the stock price right now. So what we like to do is to get, affordable premium as close as possible to the strike price. If you notice from me, I like to pay a little higher premium because I want to capture as much delta as possible because I will make more money if I'm in a call. I will make more money on this 118 strike than if I bought a 122 strike for the same week. But I'm paying a higher premium. But that's when in the money play is. And out the money is something, outside of the strike price. I mean, out the money can go, you can go as high as you want. They're all out the monies, but obviously you're not gonna, Apple's not gonna move to 134 in 4 days. So that's what we mean by in the money and out the money.
So let's say Apple, we chose the 118 strike price, correct?
Mm-hmm.
And let's say Apple goes to 122.
Mm-hmm. Yeah.
So that's gaining money, correct?
Yeah, you're gonna make a good amount of money. Like today. So today I got, so I think I bought an Apple call, a 120 call. Actually, this is not a good example. I have a good example. AMD. Oops. So AMD, I think it was a couple weeks ago. AMD was at 83, but I bought an 80 call, right? I bought an 80 call for January. Okay, so it's a little expensive. So I bought AMD, I think the premium was at 940. But again, at the time, AMD was 83. I bought an 80 call, so in the money. Right now, AMD is sitting at 93. Okay, well, it closed at 92.66. The ask at 93. That premium went from $9, $9.40 give or take, to $14.75. So as you can see, this 80 call has grown much faster than if I got, let's say a 95 call, because if you look at the net change, look, 270, 430. That's the delta. Okay, so if you can afford in the money plays, it's the way to go. And that's why I personally like in the money plays. You want to capture as much delta as possible. And it offsets theta, time decay, because you're already in that strike price.
Gotcha. Appreciate it.
Of course. Depp, I think you had a question? Or you're about to ask a question?
Oh, hey, this is Dwayne,
Hey.
DEP 722. I had a quick question. When setting up you all's support and resistance, like daily support and resistance, typically how far back do you usually go?
Okay.
Without having too much support and resistance, or just having the right amount?
Yeah. So it really depends on what your trading strategy is. Are you scalping? Are you swinging? So if you're scalping, let's say you want to be on a 5-day, 15-minute chart, okay? But
Okay.
you're gonna have a good amount of lines, right? So you're gonna probably have one right here, one right here where you can see how it kind of bounces, a couple times, right? You see how it doesn't break the support. It keeps bouncing it, right? And it's been testing this resistance. It finally breaks it, right? So, but let's say now this is for scalping. So let's say it breaks the support. So where are you? AMD is kind of a bad chart to chart for scalp, but because it ran up so much. But the next major support is gonna be where the last resistance was. So right here, you see how AMD right here broke? It didn't break. Actually, it tested it multiple times, but it finally broke, right? So it really depends on if you're scalping or day trading. Now, if I'm day trading, I'm going to go on the daily chart, okay? Because I need to see the major moves, in the past 5 months, okay? Because usually, here, let me just delete these drawings real quick. Obviously, I'm looking at the high, right? This is the high. Here's one support right here that I like, because, or you can do a little safer here. Actually, let's delete this one. So you see right here, this is on a daily chart. There's a one bounce. There's a test right here. As you can see, it broke that resistance. Okay, so now we're testing the high. Okay, it couldn't extend. Okay, so this was the new support. Broke support. Okay, then obviously if you see a couple of candle bars right here, that's giving me support. Tests. Look, test it again. Can't break. Test it again. Can't break. And once it finally broke that resistance, we saw AMD today push up because in the daily resistance, it was having so much trouble fighting this 8742 level. And last night, we were talking about it. We were saying, hey, 8742, maybe a safe entry of 88 is going to be good for calls because it's been having such a hard time breaking this resistance, right? And once it breaks the ceiling, it's like, you're trying to break through a wall. Your head keeps hitting the wall, but it can't break it. And it finally breaks through the wall, and all that buying volume comes in. And if you can see this, all this buying volume, that's exactly what happened today. So you can draw as many lines as you want personally, but you should be looking for, key levels where it couldn't break a certain level, right? I mean, you can go back to here, right? So, here, if you zoom in, this is a resistance. I mean, it's been testing, 1, 2, 3, 4 times until it finally breaks, right? So
Got it.
you gotta look at the patterns. I like 3 to 5, either bounces or tests. So bounces off support, testing is the resistance.
Got it. That helps.
And then obviously, with swinging, we're going to get into more of the indicators for better confirmation, TTM squeeze, moving averages, to have more tools in your toolbox to have a better confirmation. But that's the basic of the resistance support. Good question, though. Good question.
Hey, this is Justin again.
Yeah.
So, when you wake up in the morning, right?
Mm-hmm.
And y'all go over your key levels. What determines a key level?
Same thing. It's the same thing. So we're basically, for me, it's going to be different than Elkin's because Elkin is looking for those quick breakouts for the scalps, right? But we're still looking at the pattern. So maybe Elkin will look at yesterday's pattern, right? So, if he's on the 5-day, 15-minute, I hate AMD how the chart is for this. Let's go to, I guess. Okay, well, let's just say, here is a daily resistance for Apple, right? On Friday. Okay, so, well, actually, it's not good. What was that, 130? Okay, no, I'm sorry. Delete. Ignore this line. So at 1 o'clock, right here. So Elkin would probably say, because Apple keeps testing this resistance, right? Can't break through. So Elkin in the morning, pre-market, let's say if Apple hasn't moved much. Okay, let's just say Apple would stayed at 117-ish pre-market. Okay, Elkin would say, okay, well, God, I mean, this is all pre-market moving, but let's just say this is pre-market right here. Elkin would say, if Apple breaks above 117.3, I'm gonna go for calls because it this is a resistance, can't break it. But once it breaks, if I see Apple break this level, you're gonna most likely see a run up. Or if Apple breaks this support, you're gonna see more of a bearish play, right? So again, it's just finding those bounces or testing the support, and once that stock finally breaks that ceiling or falls through the thin ice, you're walking on thin ice, which is your support, and the thin ice breaks, the stock is going to go down. If you're banging your head on the wall or the ceiling, you're trying 5-6 times and you finally break resistance, you're going through, right? So you just got to find those patterns. Either for scalp is the day before, 2 days before, or day where you're finding big movements, or big resistance, big supports on the daily charts, from 5 months ago, where for 4 or 5 months the stock can't break 113.5, right? And then today you see it's trying to so hard to break that resistance, to break 113.5, and it breaks. Well, a lot more volume is going to come because investors are saying, wow, it finally broke that resistance. So it's all like, it's like, everyone has their own resistance support. It's just finding like where the most common similarities, right? So over a certain time frame. Any more? You guys are good?
Another question.
Yeah.
Hey, so when you swing in,
Mm-hmm.
you don't get scared about the data and it start decaying your option?
So if I'm swinging a weekly call and I have a further out expiration, which I never do, I will 100% be afraid. If I have a stock, that's why I say like Snapchat was a high risk play, because Snapchat doesn't really move much unless it's a huge breakout. So let's say I have Snapchat's at 44.5. Okay, the expected move of Snapchat, let's say it's 1.5. Okay, and I have a week on this contract. The chances of Snapchat moving to 46 and I have a 46 call is very minimum. So I'm afraid, yeah, because theta is going to start eating me alive. But if you see on my alerts, I put a lot more time, but I am paying a higher premium, right? So when I swing, I know that I have, at least 20 days of expiration, for the swings. I don't really have to worry about theta. Now, let's say I wake up the next morning, that stock is down, 7%, then that trade's probably, a losing trade, right? Because, 7% is a pretty big drop for a stock that might not move as fast as, Tesla or Zoom or whatever. But for weekly expiration, swinging is always a risk unless you're playing a very in the money play, like let's say you're playing PLTR, it's at 27 and you swing a 25 call. So theta is not going to really be affecting you too much, right? But if you're playing a Palantir 32 call for this week and Palantir doesn't move too much and you got 1 day left, well, I mean, your contract's basically worthless unless there's some random news that comes out that pumps the stock, let's say $10, you'll be making money. But I don't swing weeklies. If I do, it's always a high risk play.
Appreciate it.
Mm-hmm.
Hey, Kian.
Hey, what's up?
So I noticed that when you were showing verticals earlier, that like, are you able to do that with the cash account?
You can. That's a good question. I don't think so, unless I think.
Like some of them.
Unless.
Because I think a vertical is just buying and selling a call.
Well, no. You're selling a premium, right? So you have to have so if you have a cash account,
true.
Yeah, because you're gonna get that notification that illegal -1 share.
Yeah.
Right.
The call.
Yeah. So you're not selling the. Yeah, exactly. You're selling the premium.
Oh, I still want to be able to do that.
Yeah. You can open up a Robinhood. You can do it. So honestly,
1,200. So I don't know what a good size
it doesn't matter. It honestly doesn't matter. Verticals are a very cheap alternative. To play very expensive plays. Like you can play Amazon plays for cheap. Rather than getting a naked 3,200 call that costs you $3,000, you can do a 3,300. You're buying a 3,300 call, but you're selling a 3,400, right? For let's say $400. The downside of verticals is that it limits your profits, right? But it does limit your losses. Okay, it's a cheaper alternative. Yes.
Risk, yeah.
So Robinhood, you don't need, they have their own margin thing, but you can use your, let's just say a cash account on Robinhood to do margins. But you got to make sure you sell that contract before it expires if you're in the money, because then it will automatically exercise it.
Yeah. I think that'd be a good idea. Just throw a few hundred in there. And wait for some of those kind of plays.
Yeah, definitely. Good question.
I appreciate it.
All right. I think that should be good for tonight, huh? Borax, Sid, yeah.
Yeah. I think.
Yeah. If you guys want any chart setups, feel free to let me know. I can chart some stuff out for you guys.
Yep. And then if you have any other questions, obviously post in the question section, put in the owl mail, and we'll get to you as fast as possible. As always, I am going to extract this file. I sure hope everything is fine with the recording. No. It's recording for sure. But hopefully everything is fine. But appreciate you guys sticking with us for a long class. Really appreciate it. We'll post it. Either, I don't know if I can post it on the Discord. I will probably have to email you all. Or I'll just upload it to YouTube, and then we'll just click the link on YouTube. All right, guys. Well, have a great rest of your night. Let's have a good trading day tomorrow.
Sounds good. I appreciate you holding the class for us.
Of course.
Even if it seems rudimentary for more advanced traders,
I
still pick things up.
Yeah, absolutely. It's never a bad idea to refresh your stuff.
Exactly. All right, Kian. Catch you in the morning.
All right, guys. Have a good one.
See you guys.